Okay, in today's video, we're going to discuss if it's too risky or not to retire on ULTY, which is a Yieldmax dividend ETF fund that has a really huge dividend, and it's been the talk of the town lately. But the question is, we already own ULTY, as you know, but can we increase our ULTY holdings to a point where it's not too risky to retire on? Okay, what is that magical threshold that we need to be at to retire properly on our Yieldmax and Cornerstone dividends? Yieldmax helps me earn over $750,000 per year in dividends. As you can see below, this number has increased today because I added to some funds today. My members who are in my trades know what this means. And we're still outperforming all of the indexes with our approach using Yieldmax and margin and Cornerstone. Of course, we're up 21% for the year. The S&P is up 5%, the Nasdaq's up 5%, the Dow's up 3%, and the Russell's up 0.58. So we're living financially free out of our brokerage accounts using Yieldmax, margin, Cornerstone, and these other dividend-paying funds on margin. If you need help doing the same, email me for my e-guides at akatod48@gmail.com, or you can head to my website, unconventionalwealthideas.com. We're leading the FIRE movement here. I have over 100 testimonials here that you can check out and enjoy when you have the time, and you can see all of my e-guides, all about my products. You can see here the Yieldmax ceremony that we just went to, the closing bell ceremony, how we were featured here on live TV at the Nasdaq. So you can see all about me here at my website once again. Also, when you're trying to get my SMS trades, please be sure to email me and let me know which service you chose, and I'll add you into those SMS alerts. Make sure you email me. It's very important, okay? So back to what we were saying. We're up $9,000 today, $9,700, 0.48%. That's what we have to look at, 0.48. If we look above, we see that that's beating the Nasdaq. The Nasdaq's up 0.33 and the S&P is up 0.60. So if we factor back in our margin, you'll see that we're actually outperforming the indexes because we use some margin. So we're at 0.63. That outperforms the S&P. The Dow has us today by a hair, and that's because value plays are up. We've been talking a lot about that in our members only videos, but I'm not really worried about the fact that I'm up 10,000. I'm just worried about the fact that I'm up 0.63, which again beats the S&P above. We want to stay in between the S&P and the Nasdaq at all times when we're using Yieldmax and margin and Cornerstone, because we don't want to have too much performance. We don't want to have too many daily gains, because if we have a down market, obviously we're going to get hurt a lot more. So here's our margin leverage right now. It's 458,000, call it. But my dividends of over 600,000 per year, 700,000 per year will pay back my margin debt in less than 1 year. So that's the key to using this account with margin. It's using our dividends, which then pay down our margin debt. So once again, dividends of over 700,000 pay back this margin debt in less than a year. So where is the risk in retiring with ULTY if our dividends pay back our margin debt at the end of the year? Before the end of the year, we have 6 months, and then our margin debt is paid back. We'll be in plus cash, and then I'll have to invest it because cash is trash. It loses to inflation, in my opinion. It's not an opinion, it is a mathematical fact. So we have to always keep pushing the limits here, and we have to grow. And with ULTY, we already have 10% of our portfolio in ULTY. ULTY, as you can see here by the chart, it's been going sideways. It has around an 80% dividend. Just go to the Yieldmax website. You'll see here an 85% yield for ULTY. And we've been through the holdings of ULTY. The question is ULTY too risky to own? Well, it's not really about the holdings. I mean, the holdings are critical. Yes, you can see the top 10 holdings here. They're quite volatile. You can go look at all the holdings if you want, and you'll see that they have some quality holdings in them. They are indexed, but they also have some speculative names. And me and Marcos will go more in depth on this on the next podcast we do with Yieldmax and ULTY. Stay tuned for that. Go check out Marcos Milla's channel. But these holdings here are high quality, a mix of high quality and low quality, highly speculative names. So that's where they get their income from. It's because these implied volatility levels on these names are so high that our income can be around 85%, our distribution 85%. But the problem with that is that these can all fall significantly. Now they protect their positions. He manages these with puts and calls. You can see in the columns here you can see where he has his puts and where he has his calls. And that's very helpful in a down market because that's going to minimize portfolio drawdowns. However, it's still not totally diversified, okay? This can still fall 3 or 4% in one day, whereas the index would fall maybe 1 to 2% on a given down day. So you have to be very careful when you're using anything that has small amounts of holdings in them. It doesn't matter how quality they are. They can fall 2 to 3 times more than the indexes. When we're trying to live financially free out of our brokerage accounts, we need to have our margin, especially if you're using margin, you need to have it pegged to the indexes. Even if you're not using margin, you want to be tied to the indexes. That's the way to get ahead. Jack Bogle says so. Warren Buffett says so. All the greats say you need to not only use some debt to get ahead, but you need to be tied to the indexes. ULTY is diversified. So that's very reassuring for investors who are trying to put a lot of money in ULTY and retire early on it, because ULTY has that 80% dividend. It is diversified. So why not just retire on this thing? I mean, it has all the holdings that we want within it, like MicroStrategy. It has other types of growth plays that are sexy. So why not be all in ULTY? Well, for me, I keep it at 10%, as we know, because I try not to keep anything more than 10% in my account, except for Cornerstone, because Cornerstone is a 5-star fund. It's a 4-star fund right now, but it fluctuates between being a 4-star fund and a 5-star fund, as you can see here on Morningstar. And if I were to increase my ULTY beyond 10%, well, then now I'm risking less compounding ability, okay? Less compounding ability and a few other risks that we're going to lay out in this video. So having ULTY at 10% is great. It only takes up 50% of my available withdrawal, and that's the key to getting ahead here at this channel. Everyone knows that maintenance is the secret to living the FIRE lifestyle, which means financially independent, retire early. For every $1 you put in your account, you get $4 of purchasing power. If you're just now joining my channel and you don't know what any of this stuff means, you get $4 of purchasing power. Everyone has this power granted to them in their brokerage account. That's why I think investing is the greatest thing you can do in the world to get ahead. And when you're doing this with Yieldmax, you're sacrificing the upside to get the income instead. So you're going to see these drawdowns in your portfolio, like with your total gains and losses, as you see by, let's say, an ULTY in your portfolio. But I've showed you this in the past. You have to factor back in dividends. My gains and loss columns do not factor back in dividends, which I use to pay down my margin here. So as long as my maintenance is relatively low for ULTY, okay, it's 50% maintenance, which to me is actually high. But when you're talking about the high risk names that ULTY has within it, 50% is actually quite low maintenance. And that's how we're able to not only live out of our account and live free from 9 to 5, but excuse the background noise, we're able to live free from 9 to 5 with those dividends, because look, these dividends are more than enough to supplement my paycheck. But I'm also able to do this without ever coming close to a margin call. Everyone thinks that my channel is so risky. I have a lot of new followers lately who have come on, to the channel, and they leave these comments saying that, I'm really risking it all with margin. But look at my available withdrawal. It's over 300,000. It's 384,000. My account is 1.6 million. My available withdrawal is over 300,000. That means that we can withstand over a 20% correction and still not receive a margin call, still pay our bills out of our account. And some people say, well, what if you have an over 20% correction? We talk about this all the time. I'm hedged with put options. You can see more about that in my Volume 5 e-guide. I always keep put options on, and that helps us withstand margin calls. Obviously, there are thousands of percent in the recent corrections that we've had. We've had multiple crashes since we've started this YouTube channel. If you're just now watching this channel, we've had one in 2023, we had one in 2024, and of course we had one in 2025 with the tariffs. And we withstood all of those corrections. We made it out of those corrections with flying colors. Okay, we were still outperforming all of the indexes with our approach using Yieldmax and margin. So how can you tell me that this is a risky strategy when we're up 21% for the year, blowing away all the indexes, just using an index approach with margin, using some Yieldmax? And also, we outperformed the NASDAQ during the recent correction. We were outperforming the whole time. Go check out my past videos. That, again, is all thanks to maintenance and watching my available withdrawal and watching my beta with my maintenance. If you need help understanding maintenance, that's in my Volume 3 e-guide. So if ULTY is only 10% of the portfolio and it's 50% maintenance, how can this be risky when my margin debt would go away so soon because my dividends pay back my margin debt? in less than a year. So where's the risk from that perspective, first of all? But even if you're not using margin, where's the risk in ULTY if it's only 10% of my account? All right, we're getting huge dividends off of that 10%, 80% yields. Where is the risk then? Because if it were to have a big drawdown, my account wouldn't really see the impact because ULTY is only 10% once again. So the question is, I don't think there's much risk when it comes to the margin, obviously, because the dividends pay back in less than a year. Also, my margin interest is low. If you're wondering what's up with my margin interest with this kind of level of margin, I've negotiated my rates down twice. Many of my clients who bought my e-guides did the same thing because you get my phone number when you buy my e-guides, and I text you the script whenever you're ready to negotiate those rates down. All right, ask any of my members. Most of them have been successful in negotiating their rates down, and if they weren't, they simply used the script, followed the criteria, and then they were able to get it the second or third time around. And they put those testimonials on my website. So I've left a lot of those comments, again, in the testimonial section of my website if you ever want to go check that out. Also, I'm sure my members can attest to that in my comments here. That's where I get those testimonials from. They're all from the comments in my videos. All right, so ULTY, once again, we have 10% of our account in ULTY. And Navy, she is snoring very loudly in the background. Navy is my Frenchie, obviously, my French bulldog. And her name is Navy because it's short for the Cornerstone NAV drip, which I'll tell you about in 1 second. So Cornerstone, we alluded to this before because we were talking about if we increase our ULTY position beyond 10%, what kind of risk will that put our portfolio in? Because that's really the topic of today's video. It's not really is ULTY too risky, okay, or is margin too risky? Because you know that my dividends pay down my margin. You know that my interest rates are low. I just laid that out. You know that ULTY is only 10% of my account. So even without margin, it's not a problem. So where is the risk in retiring early on ULTY if we don't have any risk with margin, or ULTY is not going to really impact our account if it's 10%? Well, obviously, if I increase my allocation to ULTY, I could have more risk in the account. But is there more risk? Let's talk about that, because we know that you can hedge ULTY with SALTY now, SLTY. So you wonder how I got my income up today, okay? If you're noticing, my income went from like 740 to 756. How's that possible? Because I increased my hedges, my short income hedges for Yieldmax, okay? I do this every so often after a big run. And ULTY is going to have SALTY, okay, SLTY, which Jay and them announced with Yieldmax. So we don't know if that fund's going to come out, but they're planning for that fund to come out. Well, we could just get more income if we bought SLTY. Our income would increase, from 756 to, if I'm hedging 10%, 1 for 1, I mean, our income would be closer to 900,000, closer to 800, a little over 900,000, little under 900,000 if we were to use SALTY with the equivalent amount that we have in ULTY, and then, assuming the same yields of around 80%. We would increase our income by, if we used 150 grand worth of this, 50% more would be 75 grand, okay, 50% more yield. So we would be, again, just underneath 900,000 in dividends, should we just use SALTY and add that into the equation, okay? And then my margin debt, you would see my margin debt would increase. But is this risky margin when a lot of this margin is already short income? Okay, so yes, I'm getting a lot of dividends. And yes, I have a lot of margin. But a lot of it is neutralized from the short income ETFs with Yieldmax. Okay, Yieldmax obviously is going to have SALTY for ULTY. They have Winter for Misty. They have Crash for Tesla. So this is how I'm increasing my income without the risk using my margin. And then my margin gives me this outperformance because it's acting as a separate account outside of my account. As long as you're watching your maintenance properly, because these inverse hedges are usually 100% maintenance, then you don't have to worry about ever receiving a margin call. Once again, because the margin is neutralized, the risk is neutralized with these short vehicles. And then the dividends pay back the margin so fast that the margin goes away anyway, so your account grows by the equivalent amount. So once my margins pay down, my account will grow by the equivalent amount. That's how I'm getting all this growth. And we're going to be doing it without the risk. Now, again, the question is, can I increase my ULTY position? It's such a nice fund. It's been performing so well. Every day it seems like it's up 1 or 2%. then it just goes sideways and gives you that dividend as well. Okay, look at this move. It's just been moving sideways, but each day giving us days gains, and then they'll wipe out the days gains with the dividends, but the dividends are tax-free, a lot like Cornerstone, and they're giving us that income to pay down our margins so fast that we grow our account much faster through ULTY. All right, and so can we increase it to 15%? Well, this is what happens if we increase it to 15% or 20%. Why not just go 50% ULTY? Why not? Well, again, first of all, as I already alluded to with Cornerstone, if you do that, then where are your other dollars going? Okay, you're putting a big tilt of your dollars, a big skew of it into ULTY, which won't give you the capital gains long term. It gives you capital gains daily, but not capital gains long term. You saw that chart. Cornerstone, on the other hand, gives you the 20% yield per year, okay, at its NAV, 21% per year, and it gives you the drip at the NAV. So let's look at Cornerstone's profit right now. Every month we're getting 20% on top of the 20% dividend. People think I'm misspeaking. They're like, you misspoke. It's a 20% dividend per year, not per month. No, I did not misspeak. Cornerstone has the 21% dividend per year, and it gives you 20.3% premiums per month. Let's refresh that. We're at 18.95. All right, so that proves to you it's the, just a different number proves to you that these are two different numbers. The Cornerstone dividend is 20%, and then the premiums right now are 18.95%, which are low to me historically. That is the average premium, yes. But to me, I've seen 37% gains documented many times on the YouTube channel here. We've had 40+% gains every month with Cornerstone. So it's hard to drip ULTY, for example, because that's another risk with ULTY, is if you keep dripping the dividends, why not maybe not increase your position size from 10 to 15? Why not just drip ULTY more? Because you're not having any advantage when you drip ULTY. ULTY could fall, and then you're top heavy, and you have no margin debt reduction in the meantime. You can't buy the dips if you drip ULTY up high. But Cornerstone's always dripping the dips for you down low. And as you see on the Morningstar chart, it actually moves upward, left to right, upward, left to right. So I don't want to hear any comments saying, well, Cornerstone's down 95% year to date. No, it's not. You have to, it's just like with Yieldmax. You have to factor back in dividends, stock splits, and these rights offerings. Cornerstone has rights offerings, okay? That's what's really special about Cornerstone is it not only gives you the 20% dividend with those 19% drip gains every month on top of the dividend, and it gives you days gains. It's up 1%, almost 1.5% today. Look at the market. That's blowing away all of the indexes above Cornerstone. I mean, look at that. You get best of all three worlds. You get the dividend, the drip gains every month, and the days gains. Plus you get the rights offering, which is how you level up in Cornerstone. It's how you really make money in your account. It's how you level up your account. It's how I went from 15,000 to $1 million. I always tell my members, because after Corona, that's all that I had was 15,000 in my account. And I used the triple C's. Okay, the triples and Cornerstone, the C's, with full margin at that time, okay? And now I don't recommend using that much margin, of course. But with Cornerstone, during the recent rights offering, we sold out right here, okay, right here at the highs. I have to say this every time because look at how perfect this uptrend was. We captured all this move, and then we had this perfect sell-off, which we captured and we knew about thanks to the rights offering announcement on Discord, okay? We have the N2 filing at Discord, and we have the rights offering announcement here at Discord. Okay, that's the huge advantage of my Discord. When you buy my e-guides, you get my number for life. That's a huge advantage. And you get Discord here for life, which alerts you of the Cornerstone rights offering announcement. A lot of members have my Discord. They bought my e-guides. They have my number. They have the Discord alert, but they're more old-fashioned like me, and so they wanted SMS alerts, and so that's what they've signed up for since. Okay, you go to my membership section on my YouTube wall, and you can see how to sign up for the other services that I have. Okay, we have a portfolio service. You can follow my portfolio at any time here, or you can upgrade to the SMS messages if you want that Cornerstone rights offering announcement, okay? If you don't want to use Discord for that rights offering announcement, again, we got the N2 filing right there, which coincided with the exact top of Cornerstone. So Cornerstone tells you when to buy. It tells you when to sell. It's how you really level up. The S&P does not tell you when to buy and sell. Cornerstone is the NASDAQ. It is the S&P. It is the NASDAQ. It is the index. But it's the highest yield around, 20%, with the drips at the NAV every month, with the daily gains. What if you don't have the drip at NAV feature at your broker? Well, you still get the daily gains of Cornerstone, you get the dividend, and you get the rights offering announcement. You get that ability to level up. Once you sell out at the top and you buy back at the bottom, and it's not always with the rights offering, it's with the premium thresholds. Make sure you're playing Cornerstone properly around these premium thresholds, which I lay out in my volume 4 e-guide. That's how you really get ahead, is with Cornerstone, with the compounding, and you reload your shares at the right times, okay, which we lay out in those guides and we lay out in Discord. A lot of people have their own strategies with Cornerstone, and you can see that as well here in Discord. I just follow my strategy, the one I lay out in volume 4, but there are other ways to play it as well. It's the best way to amass your wealth. Now, the other reason why I have to have so much in Cornerstone is because ULTY is 50% maintenance. If we increase our position from 10% to 15%, we're going to suck up a bunch more of our equity. But with Cornerstone CRF, we only have 30% maintenance, and that's how we're preserving our equity, okay? It's with the low maintenance with Cornerstone. All right, so if you need help understanding maintenance, once again, that's in my Volume 3 e-guide. And if you need help understanding Cornerstone, that's in my Volume 4 e-guide. So I just want y'all to understand, when you're watching my videos, that this is a total approach that we're using here to live fire, okay? It's not like I just put all of my money into Yieldmax dividends on margin and say, you know, good luck, okay, to myself, and I just hope for the best. No, this margin is carefully thought out, okay? These margin levels are neutralized with my short income ETFs. I have other kinds of short ETFs. All those can be found in Volume 5, by the way. It's not just how I hedge with options, it's how I use all of my short ETFs. And also, we're using this margin in such a way that it's such a small amount. How can it really hurt me if my available withdrawal is high and my dividends pay back so fast? I also have an E-Trade checking card. I can swipe and do whatever I want with my E-Trade checking card. It comes right out of my account, and it just adds to my margin debt. I live out of my equity, as I say to people. It's not out of the dividends I live out of with ULTY. It's the equity. Now, speaking of dividends, I just alluded to you the fact that another reason why we have to keep Cornerstone is for the low maintenance. And what's the risk of going from 10 to 15% in ULTY? Well, another risk to that would be just the fact that our dividends don't change with Cornerstone, okay? Our Cornerstone dividend is set for the year. They set their 20% dividend for the year. The dividends sometimes rise in Cornerstone or they fall. It's all dependent on what the market does and what the NAV of the market is doing. Also, once again, our dividends are tax-free with Cornerstone and Yieldmax. A lot of them are return of capital, so they're tax-free. But what if we increase our position in ULTY for the millionth time, I keep saying? Well, if we do that, not only do we lose a lot of equity because ULTY is higher maintenance, don't forget that point, but the dividend for ULTY can get cut, okay? Because if the market falls, the dividends fall for something like an ULTY. The volatility falls in these funds, and you're going to see a big dividend cut. And if you were to put a lot more of your money into ULTY and increase your weighting to it because you want to retire early on ULTY alone, you're convinced that you don't need the compounding gains from Cornerstone or the Triple C's. Triple C's is the latest e-guide that I wrote, Volume 7. All right, that's how you get maximum days gains potential while using Yieldmax in combination with your margin. That's my latest e-guide. Once again, it's my most favorite. It's my best e-guide, I think, because it has a summary of all the other e-guides put together in it. And it's how I make these daily gains, okay? The Triple C's, that's very important. Now, the triples you need your growth from, and the C's you need your compounding growth from. Very important. Once again, everything that I'm laying out to you in this video, it's very important that you use all these pieces in your investment approach. In my opinion, I don't give financial advice. But these days gains that I'm getting, it's because of the Triple C's, also the double mag plays that we have, okay? The double leverage mag 7 plays that we have. That's how we're getting these days gains, okay? ULTY is not really driving those gains today. ULTY is down 0.16 today. So what's driving the gains, once again, would be Cornerstone and these Triple C's that I use, okay? The Triple C's approach. Again, that's Volume 7 if you need help with the Triple C's and understanding what that is. Very important. But if we increase our exposure to Yieldmax and we go 15% or 20% because y'all love it so much, what if the market falls and then you have all your money tied up in something like an ULTY? This is just the risk of ULTY, I'm sorry. You have all your money tied up in something like an ULTY. It falls harder than Cornerstone. It falls harder than the indexes. You're left with a gaping hole in your account, and then your dividends fall from, let's say, $700,000 to 600,000 because they had a dividend cut. All right, so I know I've been giving y'all a lot of stuff today, a lot to chew on, okay? I was excited personally to give you all this information. But if you're going with ULTY and you increase your exposure to ULTY or even YMAX or both, you're going to see bigger drawdowns because they have less holdings within them. YMAX, you can always, you see a little bit less drawdown in YMAX, it seems, but YMAX can't be managed like ULTY can be managed. ULTY, he can swap things in and out. YMAX, he's less able to do that because that's his fund to funds. But if you're having it all in YMAX or ULTY, and again, ULTY has a lot of pros. It manages its risk. You can hedge it with salty. It has its individual positions protected. It has its, a large dividend, which pays down your debt so much faster, it actually lowers your risk. That's a very important key to understand. But unfortunately, if I were to put most of my money in these funds, I would be mostly worried about not only a market fall, because those would fall bigger than the indexes like Cornerstone, but the dividends would get cut. I'd be saddled with all that margin debt, and my dividends wouldn't be able to pay down my margin debt as fast, whereas Cornerstone is going to keep its dividend the same, all right, keeps its dividend the same for the year. And then that's the fear I have for a down market with ULTY. And an up market with ULTY, I have fear of losing compounding ability, which is what you need. You need Cornerstone and you need the triple C's, okay, and the double max for your compounding ability, okay, to get your day's gains, which is the ninth wonder of the world. It's how you really make the easy money in this world. It's by having a lot of money in something where you only need a small move, okay, 100,000 in Cornerstone versus 10,000 in ULTY, okay, or 10,000 in Bitcoin. You need a 100% move in Bitcoin to double your 10,000, whereas with Cornerstone, you only need a 10% move in the market to make the same 10,000. And then obviously when you have 110,000 and you keep growing as a function of a growing position size, your compounding makes you money easier than anything else can in your life. Your dollars are like your foot soldiers for you, as Kevin O'Leary says, and you have to have them work harder for you than you could work at a job. All right, so you have to have compounding in an up market, and then you have to worry about dividend cuts and portfolio drawdowns in a down market. If I were to increase ULTY from 10 to 15 or go from 15 to 20, we're going to see problems on the compounding front for the upside, and we're going to see problems on the drawdown side and dividend cut side on the downside, okay? So I think that there's a place for Yieldmax in your portfolio. There's a place for Defiance, Rec Shares, Roundhill, Cornerstone, all of it. But you have to allocate your positions properly. Yesterday, ULTY in the market was down significantly. Some of my positions were up 20% plus, okay? One of my consumer cyclical plays was up 20% yesterday, okay? Yesterday, healthcare was up. Consumer cyclical was up. You can see all those plays in my Fire Portfolio section here under the membership section. Okay, so if anyone has any doubts about ULTY or Yieldmax or my approach with margin, please leave your comments in the chat below. Okay, I'm going to go ahead and get to your questions now. We're living financially free out of our brokerage accounts using Yieldmax, Cornerstone, and margin, and anyone can do this. You can do this too. Everyone's granted this power in their brokerage account. You just have to use margin properly. You have to use these funds properly and allocate properly, and that's all in my e-guides if you need help living financially free out of a brokerage account like me and so many other members of my channel are doing, okay? So email me if you want my e-guides at akintosh48@gmail.com or head to my website, Unconventional Wealth Ideas, if you need more help doing what I'm doing. Okay, yeah, everyone like this video. If you haven't done so already, subscribe. Hey, you never know what happens to my channel, okay? Maybe something happens with YouTube. Maybe just, who knows, okay? You want to like and subscribe to have my videos promoted, and also, go to my Twitter page and follow me on Twitter just in case anything happens to me. All right. You can also, I'm sure, sign up at my website. I'll do a newsletter at my website soon, but at Todd Aiken, UWI, okay, for Unconventional Wealth Ideas, my Twitter handle, at Todd Aiken, UWI, just to have a backup in case I need to get the message out and I can't do it on YouTube. Blocks looks very attractive to me. BTC and Ethereum growth with dividends. I'm heavy on Misty, so don't know what to do. Yeah, let's talk about that in our members only video on Friday, Daniel, because there are some other Bitcoin plays I'd like to discuss. Rec Shares just released some new funds, so we have a lot to talk about on Friday. Yeah, Wayne, ULTY is a beast. I know. FOMO, good to see you. Bell War, yes, you appreciate the text for the live stream. I'm glad you like that because, yeah, it's these SMS texts are quite expensive, but it's just great staying in touch with y'all and staying close with y'all, okay? I love it. Words to live by. This is the future. Absolutely, words to live by. Those are all these are some words to live by, that's for sure. Hey, Chris. Hey, Cap Gaines. I appreciate that. Dropping gems. I'm trying. Hey, Ryan, BTC Force. Yieldmax tells us ROC distributions only to restate a different ROC to the IRS. Unwelcome tax bills coming for Yieldmax product holders. BTC Force, I remember your comment from last time saying that. I think that you have to just give it till the end of the year. We'll see how the ROC percentages shake out then. Every fund changes them. Yieldmax is no different. Hey, Jeff, but it's still, any ROC to me is better than nothing. That's nice tax advantaged treatment, and the more the merrier for that, because we're getting all this income. As long as we don't sell them, we don't pay the taxes. As long as the underlying NAVs are growing, like in Cornerstone's case, you saw in the Morningstar video, the NAVs are growing. That's all that matters. Jeff, happy Friday, or happy hump day. I'm sorry. That's right. I never even know what day of the week it is because I just live off my dividends and every day is the same for me. As long as we're avoiding margin calls and not even getting close, which we didn't come close each time we've had these corrections. Because there's ways to use your maintenance, ways to use your hedges, ways to delever, which I talk all about in Volume 7. Okay, Dylan, you're loving GBTY and Roundhill weekly pay ETFs. NVDW is crazy good. I agree, Dylan. I agree. I've been, going with NVDL, Dylan, and that's been outperforming things quite considerably. And then, of course, we have NVIDIA to pair with that. And our other semiconductor positions, but nonetheless, that is good. It's just the problem is that it's high maintenance for me, and so why not, if I'm going to go high maintenance, go even higher with some of the dual mags that we use, which is how I'm getting such great outperformance. ADV, good to see you. Dynamic Wellness, hey there. LRS, hello, made it to the live. All I had to do was call in sick. Oh, thanks LRS. That's quite generous of you. That means a lot to me. Thank you. Dynamic Wellness, let me know what you're trying to say. Sprint Trip, I keep YQQ to hedge ULTY. Yes, I have that too. We have YQQ Sprint, but it's not enough to protect in the event of a drawdown because YQQ is pegged more to the NASDAQ, which falls less than ULTY would. So remember that. Now, Salty might be a little more interesting. Also, the puts that we use are much more helpful in the event of a market collapse. Okay, Dynamic, still recommending the closed-end fund Go. I don't make recommendations, but Dynamic, I still own it, if that makes sense. Still has a high yield, it's still indexed, still has low maintenance. What's not to like with Go? If it's a 5-star fund, I don't recommend anything though. G, would your strategy change if you weren't living out of your account, but strictly trying to grow a smaller account? No, it wouldn't, G. It would not change one bit, okay? Everything that I said here works for all levels of account. Scale it to your account size. It works for all account sizes. Denali, thoughts on Nest Yield, Eggs, EggQ, Eggy. They crush competitors, but newer funds, smaller AUM, but another group under the title management umbrella. Unclear how title trusts differ. Denali, you always come up with some great ideas, and that's why I love this community. And by the way, if my mic's not working, let me know, okay? I'll try to, increase, turn up the volume, but we will discuss that on Friday, okay? How about that, Denali? We have some great things to talk about. We have some new funds here with Nest Yield. We have new funds with Rec Shares. Let's talk all about that when we have more time on Friday in our members-only video, Denali. Great stuff. I can't wait. Pro Fast Guy. Todd, this is one of my new favorite channels. I love ULTY, 30% of my portfolio. Just heard of my Roth dividend journey, found this channel. Your knowledge is greatly appreciated. I have so much to learn. Thanks, Fast Guy. I really appreciate that. Yeah, you see why I'm having issues increasing my allocations from 10 to 15, let alone 30, because of the reasons that I made in this video. Let me know what you think about that, Fast Guy. And I know you have a Roth, and so Cornerstone is also very helpful in a Roth, okay, because of the tax advantage that you get during the rights offering. All right, so let me know if that might help you rethink your allocations. Maybe it won't. Let me know. Sprint, but it's really hard to get this performance. I just want to say I'm getting this performance, not only this kind of outperformance, but it's with such high available withdrawal, okay? Such high available withdrawal with 50% maintenance names, which I think is pretty special. A lot of that is due also because of the puts that I sell. I sell puts. That's how I get my performance on top of ULTY. We didn't really talk about that today, but if you need help selling puts, that's in my Volume 6 e-guide. And puts allow me to, again, just get more performance without risking my margin, and I have more equity to play with because puts lower my maintenance. So I know I just dropped a new little thing for you guys and gals on puts, but you got to understand that when you're using Yieldmax and margin, I could push it. I could get way more performance, but I'm trying to keep my equity high so I can always live out of it, always be able to pay my bills, and so I can always sell puts whenever I want to for free money almost. It's like layups when you sell these put options because you're just selling time and volatility. They just suck up equity a little bit. So I'm also keeping high available withdrawal to allow me to sell puts for easy money, if that makes sense. And I could push it more. So again, fast guy, let me know if you rethink your allocations based on what I'm saying here. You know, like, can my performance really be beat without pushing it with too many risky funds or pushing it with too much margin? Okay, let me know, guys, because we're all trying to get better here and have the best portfolio possible. All right, but I've been doing this for 20 years. I can't imagine anyone bringing to me a better way to outperform this market. Okay, most members call me and they say, hey, can you help me with my portfolio? I want to try to augment, some positions and get some outperformance. I always just say, copy my allocations, because I've been doing this for 20 years and I've been trying all these different ways. And so far, this is the best way in my experience. Sprint, you have TSPY, which is a healthy ETF with less risk. I love TSPY. Just not enough yield for me, Sprint, but it's great. It's definitely been a great performer. The Winmore Trader, great work as always. I'm going back to watch this all the way from the beginning. Thanks, Winmore. Appreciate that. Edwin, I need to get started on this. Anytime, Edwin. We're always here for you. I'm here for you. My Discord community is here for you. We are all very close-knit, and we're all a very enthusiastic, passionate community. So visit Discord anytime you're ready. Sprint, how do I buy the guides? You just either email me at akintalk48@gmail.com, or you go to my website, unconventionalwealthideas.com. And this is where you can get to know me better. You can, again, read testimonials, and you can go check out my bundles. Okay, a lot of people are interested in my bundles because it gives you my phone number. It's right here on the Get Started. Gives you my phone number and Discord access, free for life when you buy any bundle. Okay, so remember, the number and Discord come with a bundle. A lot of people are just buying one guide and saying, where's my Discord access? Again, it's with any bundle when you buy my guides, plural. Okay, and the reason why we do that is because there's too many questions asked at Discord if you don't buy my e-guides. It's really hard to get into my Discord. There's a prerequisite. Okay, I like to make it to where you have read the guide so that it cuts down on time on answering questions and you don't make any cavalier mistakes. Okay, some people think that they know how to do this margin thing already, and some things they haven't considered, which is what you need my e-guides for. You need a strong foundation so that nothing catches you by surprise when you're using your margin. Okay, so back to the testimonial section. Let's pull up the chat. You're welcome, Brent. Okay. Matt, Todd, good content. Would you do a special episode on hedging strategies, including winter, salty? Yes, I've done that before. It doesn't really get the views for some reason. I don't know. Maybe people think that they're bulletproof in some cases. I don't know. I know that protecting your account and hedge protection is like the utmost, it's of utmost importance. It's the most important thing to help me sleep at night and protect my account in a down market, and it ensures our fire lifestyle. So that's all in Volume 5, Matt. Am I saying your name right? Yes. Or just check out our members videos, because we talk about that all the time ad nauseum in our members videos and in my SMS text, which I just sent out today when I rebalanced fiat and Coney, for example. Brent, I'm with Schwab. I don't believe they have the CRF drip. Yes, they do, Brent. Okay, from what I understand, please double check with our Discord on our brokerage specifics channel. Also, if you're Canadian, we have a Canadian channel, okay? If you want to know how this strategy works with Canadian investors, we have a Canadian channel. Fast guys, so buy CRF, put on the drip, take my drip off ULTY. Yeah, it's hard. I like to drip ULTY on the dips, but to each his own, fast guy, because, again, if you're dripping up high, you have a lot of risk down low, whereas Cornerstone's dripping the lows for you, okay? It's the only fund I know of that has that kind of advantage. Ophir, hey, Todd, any idea when the next RO and CRF is? I wish I knew, Ophir. If we knew that, we would be rich. We wouldn't need to do any kind of work whatsoever in life. And we would just be living the dream at that point. But we can watch our premium thresholds, and we'll be watching those premium thresholds closely in our members-only videos, which you're a part of, and I'm so thankful that you are, Ophir. John, how much would you invest if you had a job and wanted to escape that job and live fully off Yieldmax dividends? Well, it doesn't matter really how much you invest. It's more about how much You can get loans with, I've gotten about $400,000 worth of loans. I qualify for my loans with my dividends. And also I use margin, and then I spread them properly. I use the right vehicles and I use many other vehicles, not just Yieldmax. You need a combination of compounding, dividend growth, etc., John, in my opinion. Sprint, what is the RO announcement? That's the rights offering announcement, which we alert you of free on Discord for life, okay? Also, I give you the SMS alerts for the announcement as well. The announcement is a secret to our success, okay? Playing these ROs in any closed-end fund. Cornerstone, just one closed-end fund, but it's the best closed-end fund in my opinion. It's been around since the 80s, and it's a 4-star fund. Noel, oh my gosh, I am on live. Yes, you are, Noel. If you have a question, please let me know, Noel. Jared, what percentage of margin is he using for leverage to produce the higher yield? Jared, I'm using about 30%, as you know. You can do the math there. 1.5 million account plus 500,000, of margin. It's about 30%. Hey, Noel, good to see you. Miguel, any recommendations on blocks? Yeah, blocks is apparently a popular fund, and we'll talk more about that in our members only videos, okay? On Friday, okay? Because we're running low on time today for ULTY. Okay, Jared, what percentage of margin is using for leverage to produce a higher yield? Okay, we just addressed that. Gatto, Miguel, no one cares about blocks. Okay, Gatto, I appreciate your opinion. Oh, Run, do you do 50% Yieldmax, 50% Cornerstone? No, oh, Run, absolutely not. I don't even use 50% Cornerstone because you have to watch your position size in Cornerstone. It's very important. I go over all my allocations in my members only videos, okay? They're only $9.99 a month, okay? I make that way too cheap. And then the SMS services are more expensive, obviously. Stuart, what is meant by higher maintenance? It's the cost of equity and the risk of the level of risk of your fund, okay, quite frankly. Stuart, Cornerstone has a 2% expense ratio. Never worried about expense ratio, Stuart, because my dividends are so high, my gains are so high. That's just an afterthought. Gatto, Stuart, you're freaking lost. Yeah, unfortunately, Stuart, you just let me know if you have any questions, okay? Email me or call me if you have any questions. Okay, Brent, and I hope that explanation will suffice, Brent. Also, Stuart, also go watch all my old videos or see Volume 3 if you need help with maintenance. Brent, you get about 18% on the dividends when dripped at NAV. Yes, that's correct, Brent. In some months, it's much higher, okay? We've had 40% plus every month with Cornerstone. Stuart, ULTY has 1.3 ER, Cornerstone 1.3. How am I lost? We're not worried about expense ratios at all, okay? We're only worried about maintenance and the yield and the beta in our portfolio, the level of movement with our margin. It's really a whole nother art to investing. It has nothing to do with the traditional way of investing, and that's how you really control your destiny, is by understanding maintenance, equity, your margin, your dividends. You can control your paycheck, you can control your drawdowns, you can do it all yourself. And with Cornerstone, they announce the rights offerings for you so you can control when you rebalance as well. It's like a game of musical chairs with the indexes. You never know when to sell, but Cornerstone tells you when. So you can control your whole destiny once again with this approach. Even with Yieldmax, you can control your destiny to a certain degree because you know how much your dividends are going to pay down your margin. You know where your risk is going to be at the end of the year. You know where your income can be. You know how much you can withstand from margin call, et cetera, okay? It's all in the power of maintenance. Okay, Gatto. Stuart, expense ratio isn't the same as maintenance percentage requirement. Exactly. And Nibs, I've been in Misty. Where was I? Nibs, I've been in Misty, Coney, and ULTY. I get out of it too close to my cost average. Currently have 6K. It's getting to the price where I have to keep my eyes on it. That's right, Nibs. I'm keeping my eyes on Coney, and I've readjusted with fiat because Coney's back at the highs. Of course, coin is. Brent, would 30,000 be enough for CRF to try and live free on with margin, of course? Brent, it's not about having 30,000 in CRF. It's, do you use the 30,000 properly during the rights offerings? Do you use it properly around the premium thresholds? Do you combine it with other funds with margin? Okay, it's all in my members only videos or my e-guides or Discord. Okay, it's all there. These questions are great, but they would take so much time to answer, and that's why I wrote those guides. I never started the guides when I started the channel. It was after I started the channel and people had the questions that we started the guides, and then they wanted a place to go for the rights offer announcements, so they went to Discord, and then they wanted more official text alerts in case they couldn't follow Discord. So we have the SMS systems now. And then they wanted to follow my portfolio. That's under the members only videos. They usually follow my portfolio after they buy my e-guides. They want to follow along on the journey. We all stay together on the journey. Okay? Many of my members are seeing the same success as me, if not better. Some members are blowing me away. All right? Go check out Daniel's performance here, for example. It's just insane. That would be Amber here. I appreciate you so much, Daniel, by the way. And many of my other investors, okay? Props to y'all for outperforming. Okay, college investor. The brokerage I use, ULTY, is 25% maintenance. It's the lowest percentage out of all the funds for me, college investor. Yeah, you're really lucky for that. As long as they have the Cornerstone NAV drip, make sure it's not Robinhood or Interactive Brokers. I know Fidelity has low maintenance and the NAV drip for Cornerstone, so a lot of my members are at Fidelity. They just have higher maintenance for Cornerstone. That's why I stay at E-Trade. Brent, what broker? Good question. Dylan, really appreciate the videos. I'm trying to do this from the UK. Luckily, we have Yieldmax over here. Yeah, I heard about that, Dylan. Congrats. A lot of the fun, YouTubers from the UK were at the event recently, and I heard about that. And I think there's only more to come for you. Gatto, Stewart, a small maintenance requirement allows you to borrow more and avoid margin calls. Exactly, Gatto. Well said. Phenom, can't hear me. College investor, I use public and it's 30%, my mistake. Okay, public, gotcha, thank you. If y'all can't hear me, just turn up that volume, okay? And I'm trying to work on a new mic, but I've heard my own volume and it sounds good. Hey, Aaron, good to see you, Aaron. Thanks again for the early donation to college, TJ's college tuition. All right, that was awesome, Aaron. Thanks again. Major Sam, Todd, please remind everyone that the distributions from the C's and ULTY are return of capital, mostly tax-free. I know it's one of the best advantages you can have out there. You know, why go with a Roth when you can have a brokerage account that you can live out of because you can't live out of a Roth or an IRA? Why not live out of your brokerage? You still get the tax advantages because of ROC. Hey, Casey, you're welcome. Yeah, I hope I gave you something to think about, Casey, as we raise our allocations with ULTY. Gato, hey Todd, say hello to me if you know I love you. Hey Gato, and you know I love you too, Gato. I really appreciate all the support you're giving me today. Aldrin, 187, what the hell are the triple C's? He says it all the time. I have no idea what he's talking about. Aldrin, I said the triples, like the triple leverage funds, and the C's. The triple C's are how I really got my performance because it's not only how you use them in an up market, it's how you use them in a down market without the risk, all right, and without the margin because we delevered without any margin during the recent downturn. We had 400,000 in margin. We delevered almost completely except for our short income ETFs and then still bounced back harder, okay, even without the margin leverage thanks to the way we use our triple C's, which again is all in volume 7. Matt, so I hope that helps, Aldrin. And then the dual mags are the double leverage ETFs like the Mag 7 Superb 10 names that we have coined ourselves at this channel. All right, the Superb 10, Tremendous 20. I use the double leverage vehicles of those as well as the income producing vehicles to get extra days gains. Matt, what if we use Robinhood? I like Robinhood. Many members use both because it doesn't have the Cornerstone NAV drip. Brent, I'm interested, but would have to be led by the hand, LOL. Well, here's, the hand, that I'm grabbing you by the hand right here, Brent, okay? You just go simply sign up at my website or email me for my e-guides at akintalk48@gmail.com. We have over 2,000 members who have subscribed to my Discord and signed up for my e-guides. So you can do this too, Brent, if you want it badly enough. Brian, hey Todd, question. I've gotten my brokerage out of balance by having 40% in ULTY, pushing my margin way up. Do you think I should rebalance or buy downside protection ETFs or just sell some ULTY? Good question, Brian. Let's talk about that more in depth, okay, on Friday, because that's going to take a nuanced answer, and I would love to answer that for you, Brian, because you're one of my members. So please restate this question in the next live, and we'll go over that, okay? We'll weigh the pros and cons of pushing it to 40%. JD, what is the ticker for the double mag? It's all in that I use, JD. Go check out my members-only portfolio here on YouTube. You might have to go to your phone or use your desktop, I forget which one, to see this option for the membership. You sign up for my portfolio at any time. Again, many of our holdings were up huge yesterday, up 20% in one day, one of our consumer cyclical holdings. And we have many other holdings that were up yesterday. It takes a total approach here, and that's all in my members only videos. Okay, you can see that yourself, JD, Chris. I hope that helps. Matt, welcome to the Fire Portfolio and SMS. Okay, welcome, Matt. You joined the SMS service, so make sure you email me with your number, and I'll add you into that alert. Thanks again for joining, Matt. Okay, am I saying that right? Matt 007. Okay, Matt 007. Thanks again. Okay, we'll talk soon. Denise, hey Todd, just got 1,000 shares of ULTY. Wow, I don't know what that means. I guess, yeah, I have to know the share price, and I guess that's around $7,000. I always go by dollar amounts, quite frankly, just for what it's worth. Members, when you send me your screenshots of your portfolios, and we're texting back and forth, make sure you have your screenshots sorted by your market value, not by your shares, because then I have to do one extra calculation. Phil, good afternoon to you, Phil. All right. Fast Guy, brand new, and I'm really liking your strategy, holding ULTY, PLTY, some other funds. I've watched a few of your videos multiple times. My buddy Jordan was at the Yieldmax channel. I'm coming from futures. All right, Fast Guy. Yeah, Jordan's a great guy. I had a lot of fun hanging with Jordan, and I hope to see him again soon. Glad you're enjoying the channel as well. Sprint, this is my first time I'm watching your videos. Very interesting. What is your rule of thumb for annual return? There's no way to predict annual returns. I get this question all the time. How much are your annual returns? Well, I just go by the S&P, which is 7 to 10% per year. That's the rule of thumb. But with margin, we're going to do whatever the index does times, 0.5, because that's, well, in my case, 0.3, because I'm using 0.3 of margin. When I had $1 million account just a while ago and I had 500,000 of leverage, whatever the indexes did, we did the same thing times 0.5. Hope that answers your question. Matt, I got my son a custodial account 3 weeks ago. He's building wealth at 10 years old, making $45 a week, reinvesting dividends. Way to go, Matt. That is awesome. All right. TJ, he's going to start his channel soon. He's 5, my son TJ. He's around here somewhere. And y'all look out for his channel when he does start that. And he'll show you how to grow his account from scratch. All right. From a 5-year-old's eyes. And he's still going to reach fire, I'm pretty certain, before he's 21. Okay. If that. I think we can do a lot better than that. If we can find a way for him to supercharge his income to start, get his own kind of job, maybe through YouTube, maybe through working a job. You use the job to build your bankroll up, use the margin to grow even faster, and then one day you can live without the job. You can wean off the job. All right, BW, how do taxes work with ULTY and Misty since they're return of capital? It means those are tax-free until you sell. It depends on the percentage, though. Make sure you wait till the end of the year to find out the total percentages of ROC, BW. Ancient, Yieldmax versus ULTY. Yes, I just did a video on that. Please check out my wall, Ancient. BW, and we're also going to do a video soon on that. Me and Marcos, we're going to go more in depth into those two funds. Again, check out Marcos Milla's channel or stay tuned for our podcast coming up on Friday. It'll probably be released Saturday. BW, I read there's no taxes on ULTY dividends since 100% return of capital. That's the advantage. We just have to wait and see what that true percentage is at the end of the year, BW. Boilers, lots of talk of margin and maintenance, LOL. How about those of us that don't use it? If you don't use margin and maintenance, well, then you're really not going to get ahead fast enough, Boiler. I mean, how else are you going to get ahead except working your job your whole life? So that's why we talk about margin and maintenance, because we want to get ahead now and live free now. Pro Fast Guy, see my Roth is in Robinhood. Oh, gotcha. Okay, yeah, that could be an issue with Cornerstone. Buy assets. Does anyone like TSYY, NBYY, XBTY? Own them myself, buy assets. Sprint Trip, what is the historical annual return of your portfolio? We've gotten 40% plus gains every year since starting this channel, Sprint, okay? We're at 50% one year, 50% another year, 50% another year, and we ended up closing up, low 40s, high 30s in all of those years, but we reached 50% in each of those years. You can see all of my videos, Sprint. Aldrin, thank you for answering. You're welcome. Pat, the membership has been worth it for me to make better investing decisions. Just wanted to throw out my personal opinion. I hope others join. Thanks, Pat. Really appreciate you, Pat. That means so much. Thanks for the kind words, and I hope you're doing okay, Pat. All right, buy assets. Let me know what you're thinking in the next video. All right, so once again, we're living financially free out of our brokerage accounts using Yieldmax, Margin, and Cornerstone. We're outperforming. We're up 20% for the year, earning over $700,000 in dividends. You can do this too. Anyone can do it. Just use margin properly. If you need help living the FIRE lifestyle out of your brokerage account, email me for my e-guides at aikentodd48@gmail.com, or head to my website, Unconventional Wealth Ideas. You can learn all about my e-guides here and our fire community. And you can also check out all the comments, all the testimonials that my wonderful members have left me. All right, once again, if you're enjoying this video, please click like or subscribe. You never know what can happen. Also follow me on Twitter, Unconventional. It's at Todd Aiken, UWI, just in case I need to get the word out and I can't get it out through YouTube. Follow me here on X, and I'll see you all in the next video, everyone, okay? Take care, everyone. Bye-bye.